July 7, 2026, a Tuesday, and while Nifty and Sensex were both up and they were green, one Tata Group stock was doing the exact opposite. It crashed over 10% in a single session. This is not some small cap, nor is it a scam stock. This is Trent, the company behind Westside, Zudio, and Star Bazaar. A company that just told the market its revenue grew by 19% in a quarter. Now, for most retailers, that number might sound amazing. But for Trent, it was enough to wipe out thousands of crores of market value in one morning. So the real question today is simple. Is Trent's growth story actually over? Or did we just fall in love with the stock price and forget to ask what we were actually paying for? Hi guys, my name is Shashank Guduppa and I'm a SEBI Registered Research Analyst, and today we are going to understand three things. One, how did Trent actually build this growth machine? And was it ever as strong as the stock price suggested? Number two, what exactly broke and when? Number three, after a fall of this size, is there more pain left? We will answer all of that questions in today's video. Now, Trent wasn't even supposed to be a fashion company. It actually started off as a Lakme story. In the late 1990s, the Tata Group decided to exit the cosmetic business entirely and sold Lakme to Unilever. And that sale gave Simon Tata and the later Noel Tata the capital to do something completely different. And they wanted to get into retail. In 1998, they acquired a small single store operation called Little Woods and renamed it to Westside. That one store under Noel Tata's leadership became the seed of everything Trent is today. Now remember these five things because every one of them is going to matter later. Unlike most retailers who just distribute other people's brand, Trent made a call 25 years ago to go all in on private label, meaning Westside and Zudio are Trent's own brands top to bottom. For Zudio's explosive expansion, Trent uses something called the FOCO model, which is franchise owned, company operated. A franchise partner puts in the real estate and roughly 3 to 4 crores of capital, but Trent runs the store. Now, Trent refuses to sell on Amazon or Myntra. They have zero third party e-commerce. Everything of Trent is direct to consumer. Now, funny fact is Zudio specifically doesn't run any discount sales or heavy marketing because the philosophy is great value at the entry price, no clearance sale games at all. Trent's supply chain target is designed to dispatch in just 7 to 10 days. If they find a new trend on social media, then that can be on the store shelf across India within just 2 weeks. But what went wrong? Because Trent stock went from 700 rupees in April 2021 to an all-time high of 8,234 rupees on 11th October 2024. That's basically a 10 times return in just 3.5 years. And everything was working beautifully. But this was the peak. And this was the moment the market expectations basically got maxed out. And from here, there was only one direction left for reality to basically disappoint them. But before we go further, let's understand one new concept because you will hear this again and again in this entire story, which is called SSSG or same store sales growth. Imagine you own one clothing shop in your neighborhood and last year it did 10 lakh in sales. This year, without opening any new shop, that same store did 11 lakh in sales. Now it made the sales from the same regulars and the same footfall. That is called same store sales growth. Now, a retail company can grow its revenue in two ways. One, by opening new stores, and number two, by selling more at existing stores. Now, new stores are obviously easy to open, but if your existing stores stop growing, that tells you something about real organic demand is not there, and this is just not going to be an expansion math. Now, a lot of you guys also ask me this question that Shashank, how do you do such deep research on stocks every day? And that is because we have a 17-man team in our research company that does research on both India and USA stocks, and we basically recommend this to our clients. Now let's go more into this and understand in screen share mode, and I'll show you some more interesting stuff, so stay tuned. Now let's go into screener and understand what is going on with Trent as of today. Now if you actually see Trent, it is still sitting at a P ratio of 90, which is obviously significantly high. If you look at the price to sales, that is also at 7.76, and the return in the last 1 year has gone down by 19.4%, which is definitely not good, right? But if you look at the positives, it is a company still generating free cash flow. It is a company that has 3,000 crores of free cash flow in the last 5 years. And if you look at the last 10-year growth, obviously the compounding has already taken place. But the problem is, as we mentioned, their same store growth rate was creating an issue. But why did this actually fall so aggressively? For that, we have to actually go into a different document, because they basically came out with something known as a business update. Q1 FY27 business update over here. If I go down and actually show you, you will see this here, update for Q1 FY27. And if I actually go into the business update and show you that, this is what the update looks like. So they have said, please find below the company's revenue store count for Q1 FY27. And they have said the standalone revenue for this is Q1 is basically 5666, which has given a 19% growth rate in this quarter. Like quarter on quarter growth rate is 19%. Now, obviously, anyone in our position will say that Shashank, 19% is amazing, right? Why is it not growing? Any company that's growing by 19% will definitely compound over time, and that should give significant amount of revenue. And that is exactly where the problem basically started with Trent. Because if I show you something, if I go up here and show you the profit and loss statement in the quarterly results, you will see that during the peak growth phase, Trent was basically growing at approximately 40 to 50% per quarter. Look at this growth, 45%, 52%. So the growth was extremely good. But Zudio became its own problem very soon, because what happens when a company grows a lot, the base of the company becomes very high. It's easy to grow from, let's say, 500 crores to 1,000 crores. But when I'm sitting at, let's say, 5,000 crores, if I have to grow at 50%, then 5,000 has to become 7,500 crores, 7,000 has to become 10,000, 12,000. So size becomes your biggest enemy. And that is what we started seeing very soon in the start of September 2024, where the first time we saw a dip of growth rate at 39%. Now, please note, 39% is not a bad growth rate quarter on quarter. Okay, that's great growth rate. But if you see how it started dipping from September 2024, where it went from 39, 34, 27, 18, 15, 14, and now 19%. So technically, the growth has actually come down a lot. And because the growth came down a lot of people in the market did not like it. And this was mainly because your PE ratio of Trent in the last 10 years was sitting at supreme valuations. It was sitting at 135 times price to sales. That means almost 1.5, 2 years of future revenue and future assumed fast growth rate was added into this company. And as I said, when we reached 27 September 2024, Trent was sitting at 220 PE. 220 PE from any standards, from research standpoint as well, is extremely bad from an entry standpoint. It is very, very, very bad. Now, if you look at this exact point when the result came out in October, that is when the disconnect happened, because they came out with 39% growth rate instead of 50%. And the whole story started breaking from there, because from 39% growth rate, they went to 19% growth rate now. And from 200 PE, it has actually come down to 90 PE. So technically, there are two concepts in the world of investing. One is called PE expansion or PE re-rating. And the second one is called PE de-rating. And that is exactly what has happened here. That when the PE is too fast ahead and the market gives a bad return, or the company gives a bad return, we see a massive fall or correction in the stock's PE ratio, even though the earnings are growing. See, if I come and show you the earnings have definitely been growing. And if I show you the profit and loss statement on a year-on-year perspective, you will see it very clearly that from 2022, 73% yearly growth, 83% yearly growth, 50% yearly growth, and the last 2 years, the growth has gone from 38% to 17%. This creates a big confusion for the investors, that is it still going to be a good grower or not? But boss, you need to also look at how wealth creation was made. It went from 4,000 crore top line to 20,000 crore top line in just 4 years. And that is unbelievable growth for any company, to 5x their top line in 4 years at this scale. And that was the Zudio phenomenon. If you look at the PAT went from 35 crores bottom line to 1,700 crores at the best layer. And even now they are making revenue, but market priced it to perfection for the growth it was supposed to give. And when that growth was not happening, that is when we saw a lot of fall happening in this market right now. Now, not just that, immediately what happened when in September 2024, when the fall started coming in, we also noticed that a lot of people, lot of companies started giving downgrades. So when a lot of companies start giving downgrades, these research firms, like for example, Nuvama in 2025, in July 4, 2025, they started downgrading Trent on slower growth and outlook. If you look at Goldman Sachs, they basically came and downgraded Zudio as well. So many companies started downgrading Zudio. And now, again, recently, if you see this article that came out, which was on 2026, July 7th, it had the same thing where a lot of brokerage calls gave mixed reviews. So many of them had given a reduced stance. But we also saw something very strange, and I'll come to that very strange again very soon in the next segment. Now, remember the third point, zero third party e commerce? That decision, which built Trend's brand control for 25 years, is now acting like a double edged sword because Zudio still runs at zero online revenue. So, when in store growth slows down, there is no e commerce channel to cushion the fall, unlike all the other competition. And remember the FOCO model, the engine behind Zudio's rapid store additions? In the same Q1 FY27 quarter, Trent added 19 net Zudio stores, a pace analysts flagged as moderate for a brand where store expansion is supposed to be the core growth driver. And here's a number that ties it all together. Even after this correction, Trent was still trading at somewhere around 90 times earnings. And at that kind of multiple, a 19% growth number simply isn't enough. The price was already assuming near perfection. Now, if I just do a technical analysis on Trent as well, you can see how the technical analysis works because Trent, remember the growth period was 2022 to 2024 September. At that point of time, between 2022 and 2024 September, right? This is exactly the top when the result came out. It gave a return of 6x in 4 years. That is very interesting. After that, when the decline of quarterly income came in, it fell from the top and today it is basically down 48% from the peak. And as I said, until the same store growth rate doesn't go up, we might not see a good comeback on this stock as well. Now, I want to be very clear with one thing. This is not a scam company. Please understand that this is a Tata Group company and their biggest problem they had was not growing fast enough. They're still growing, but they're not growing as fast as what they used to do before. Now, because of that, a lot of new companies, a lot of new analysts have started giving a buy rating suddenly. In the last 3 to 4 months, I have been looking at a lot of companies and they have started saying buy Trent. Now, obviously, I'm confused because the whole market is selling Trent and market actually it's falling a lot. And if you look at the recent fall that came in, right? If I zoom in and show you the recent fall that happened after the business update came out, it was quite terrible. If you see, it almost fell 15 to 20% in a single day. It went from 3,300 to almost 2,900 in a single day. So why are brokerage firms still asking for a buy when the whole market is looking at a sell? So I said, let me investigate this a little further. And we went deep into a very recent report that was given by ICICI Bank. Now, ICICI basically came out with the report on June 26, 2026. Now, if you see this, what are they actually talking about? Let me show you some very interesting pointers over here, right? So first things first, they are saying that 73% of Zudio stores are located in tier 2 and tier 3 towns. And we all know that tier 2 and tier 3 India is growing very rapidly. That is point number 1. And if you see 80% of in FY26, 80% of the new stores were opened only in tier 2 and tier 3. That means tier 1, there is barely any growth coming in for Zudio on this perspective, right? Now, another thing that they basically saw in the past, they had a slowdown in apparel segment. And what was happening is in the middle, there was a lot of negative campaign around Zudio because everyone were wearing Zudio t-shirts. And every time I walk out, I used to see someone else with the same Zudio t-shirt. Then Zudio started expanding into footwear, fashion, apparel, accessories, and those kind of things. And that actually started doing really well for that company as well. The second problem that Zudio is facing right now, because they shifted their strategy from tier 1 to tier 2, there is a metric called revenue per square feet. That means if I have 100 square feet of space, how much revenue am I actually making? Now, obviously, in tier 1, because of the premium, the revenue per square feet in metro was basically at 15,300. But in tier 2, because they're shifting a lot of their business to tier 2, the revenue per square feet is coming to 13,390, and the rest of India is 12,500. That means they have more stores, they have more square feet, but the revenue per square feet has gone down by almost 2,000 rupees because of their shift from tier 1 to tier 2 and tier 3 cities. Now, obviously, you might say that this is a bad idea. They should not have left tier 1. But if I am banking that tier 2 and tier 3 is going to grow in the future, then I have locked in the leases at a very low rate today, which will be 10 to 15-year leases. And if tier 2 and tier 3 actually explodes, then this revenue per square feet can go up. That is the thesis that a lot of companies are thinking and playing out right now in that segment. Now, here's something interesting that we also saw in the recent report, that recently they have raised around 2,500 crores in the company to strengthen their warehouse infrastructure, IT systems, AI capabilities, because Zudio, as I told you, is end-to-end integrated. The entire supply chain stack is with them. That is the only reason why they're able to ship products from design to distribution in 7 to 20 days. That is a superb model that they're currently working on. And now they have got into e-commerce, but only for Westside, not for Zudio, and that has generated around 300 crores in revenue. And they are saying that now online revenues will start acting like the new growth trigger. It's not for Zudio yet, it is for Westside, but Zudio is where the game was actually being played. But now what they're doing is they have started changing the business model of Westside also. Earlier, Westside was not even looked at because most of the revenue in Trent was coming only from Zudio. Trent has three businesses. One is Zudio, one is Westside, and another one is called Star Bazaar, very similar to DMart. Now, if you look at how they are changing Westside, they have started moving into more stores. As you can see, they have now gone up to 300 stores in FY26 from 258 before, and the square feet has also gone up. So now they are actually expanding Westside more because Westside is slightly more expensive as compared to Zudio when they actually work in that perspective, right? Now, another very interesting thing is that the management is talking about premiumization offerings in Westside, not Zudio, in Westside. And they are scaling up segments such as beauty, footwear, innerwear, home, gifting, and even lab grown diamond jewelry. Now, this has nothing to do with clothes. We always think that Zudio, Westside are all apparels and we can go buy outfits, but they are now beyond all of these things. So they're going as a full stack retailer, and that is basically what they're rolling out in a lot of Westside stores. Right now, very less has been rolled out. Only 22 Westside stores have this POME, which is a premiumization of the store. But over time, this will also increase and become a very big segment of that. Right? If you look at their India business, most of their merchandise sourcing is domestic. 80% of their merchandise still comes from India. 20% is coming from outside India. And now, if you look at Zudio, as you can see here, the number of retail square feet has gone very aggressive from 3 million square feet to 10 million square feet in the span of 3 years. Number of stores have gone up to 963. But I have seen a lot of stores closing in tier 1. I had a Zudio very close to my house in Bangalore, and that has also closed down as well. So the number of store additions has decreased. That is because you should also understand increasing competition has come. There is a company called Style Union that has come in. There is a company called Azote by Reliance. So these are new competition coming in the space that are actually creating issues for Zudio's expansive growth. Now comes the next phase of growth. The next phase of growth is not coming from apparel. As we can see very clearly here, the next phase of growth is coming from the lab grown diamonds, the beauty accessories, the fashion accessories, the innerwear, the footwear. That is where the growth is coming in. And if you look at here, you can clearly see that the beauty segment has been growing very aggressively. I would agree that the scale is still small right now, but this is some significant growth that they can actually start doubling down. Obviously, on the overall span of things, it is very small, but this has not been rolled out to all Westside stores yet. The day they start rolling out to all Westside stores, then we can see a lot of growth coming in that picture. So now the question is the froth finally out, or is there more to come? And honestly, nobody knows this yet, but you should watch out for two things. Does Zudio's pace of new store additions pick back up? And does the same store growth rate also increase? The concept which we just learned a few minutes ago. If both improve, this correction may look like a buying opportunity in hindsight. If they don't, then that 77 to 90x multiple still has a lot of room to fall further. This is me, Shashank Godaba, signing out, and please subscribe if you want us to keep coming out with more such research that might help you research before taking decisions in the market. Thank you guys, take care, see you, bye bye.